part 1, 2, and 3. And now we are moving on to part 4, which is on the discussion of accounting treatment. Okay. Question on accounting treatment. And you have two things here. One is the service cost. The other one is the replacement cost. So the accounting treatment here is for the year ended 30th of September 2019. For service costs, so this is a revenue expenditure. Why it is a revenue expenditure? Because it is incurred to maintain the existing working condition, and that means it does not enhance future economic benefit without enhancing future economic benefit, FEB, and therefore it is to be expense off in the SOPL for the year ended 2019. Whereas for replacement costs, it is capital expenditure. Why it is a capital expenditure? It was capable of enhancing, so it enhanced the future economic benefits of the existing machine. You replace a new component, and that component is able to enhance. How? By extending the remaining useful life to 5 years. Actually, for your information, the remaining useful life was originally at that time was from 1.5 years. And therefore, it is to be capitalized. The word capitalized means it is going to be capitalized as part of the machinery itself, recognized as PPE. The reason is because it enhanced the future economic benefits. So capitalized as part, meaning that you are going to add it or add it to the cost of, or the fair value of, if it's using fair value revaluation model, cost of the machine. Okay, that's the whole thing. Next, we move on to next part, which is the preparation of the notes, which is doing this notes to the account, and this is the notes on movement of PPE, and our movement of PPE here is for 2019, 30th of September. And before we do the movement of PPE, you have few items here. One is the land, another one is factory building B, and the last one is office building. You are not required to prepare the notes for factory building A and machinery, and you need to show what are the cost order, valuation, and also the accumulated depreciation. For both, something like that. So I will start with the part on cost. Before that, I would like to highlight that the office building, there was one more transaction that affects the office building, where the transaction that we have not discussed relating to office building, which is the additional information number 4. So we'll be doing that here at the somewhere here at page 3 here on the derecognition of office building, and that happened on 30th of September 19. Okay. The cost of the office building on the day it was acquired, on the date of acquisition, is 1st of October 09. It was 300,000. The accumulated depreciation right before being disposed, which is from 1st of October 09 up till 30th of September 19, sorry. You have to take 300,000, and this question still maintains straight line method, and it is still monthly, monthly basis. Sorry for the disturbance. And you divide by 50, and this period here is 10 years, so times 10. You'll get 60,000. Sorry. Within this 60,000, what you need to understand is that part of it is the previous year accumulated depreciation, part of it is the current depreciation. So you need to be able to do that, because in the same year, because you use monthly basis, you still provide depreciation. So we'll split up that later. So you get 240,000. 240,000. That is the carrying amount as at 30th of September 2019. There is a proceed that you receive, disposal proceed. And that was how much? It was 440,000. And therefore your profit is exactly 200,000. Gain on disposal that we shown in your SOPL as other income. Okay, let's focus on what will affect our movement. The one that will affect our movement is this and this, just these two. However, within this 60,000, as I said earlier, that also involve current year depreciation for that year, which is 300,000 divided by 50 times 1. This one is going to give you a figure of 6,000. So this 6,000, you need to record them, right? You need to record them before you go and actually eliminate the accumulated depreciation. And if that is the case, the accumulated depreciation right before the current year, meaning that from 1st of October 09 up till 1st of October 18, yeah, that one is actually 54. How do you get 54? 60,000 minus 6,000. So that 54,000 is that you need to pay attention, because this figure of 54,000 is the one that will be your beginning balance in your accumulated depreciation section. Whereas this 300,000 will be the beginning balance, yeah, beginning balance, but in the beginning balance in your cost section. Okay, let's do that. Together. So the beginning balance for each category of asset. You can check your answer or your workings that you have earlier done. For the land, it was at valuation figure 7.1 million, because it has been revalued at the beginning of the year, right? But the revaluation happened at the beginning, so the figure that you show here is the value, which are the fair value in the previous valuation, 7.1 million given in information number 1. For the factory building, it was 18 million. Yeah. So factory building before the revaluation, it was 18 million. Revaluation also takes place on when was it? 1st of October 2018. Land was actually revalued. This land, yeah, it was revalued at the end of the year. So that was some overlook. Yeah, so this was revalued at the end of the year, land, but the building, this one, was revalued at the beginning of the year. For office building, beginning of the year, no revaluation whatsoever. The cost is what you show here, which is on 1st of January, 1st of October 18. So we'll do number 1 first, which is revaluation, subsequent revaluation for the land. Remember, through the workings in number 1 that we earlier did, you have a revaluation surplus. There is no depreciation. Revaluation surplus was 1.1. So for depreciation, we just put dash here, balance, wrote down 1st of October. Okay. And therefore balance carried down 30th of September 18 was also no balance there, and your carrying amount for building would be the figure here, which is 8.2 million, and this is the one balance carried down 30th of September 19. So I put here 8.2 million. So we are done for our land. Next would be our factory building. Remember, for factory building, the revaluation took place in number 3. Yeah, number 2 we skip because this is impairment for factory building A, so it's not required to prepare for that. You are not required, so we skip that. But for the second revaluation, what you have, that was from our answer in requirement number 3, right? So requirement number 3 asks you to do journal. Go and check that journal, and you'll see that there are a few things that I have highlighted. One is the elimination of accumulated depreciation. When there is a revaluation, the depreciation pertaining before the revaluation took place must be eliminated. So we do that first, and that was 3.24 million. When you eliminate, you debit, right, your accumulated depreciation, and you credit your building, and that's why you deduct here. So the same thing will be done here. Elimination of accumulated depreciation. So also deducting the figure here, 3.24 million. Okay. And since the revaluation took place at the beginning of the year, 1st of October 2018, your depreciation, so your depreciation will have to be calculated or recalculated, right? And the revaluation surplus that happened on that day was, from your calculation, it was 5.74 million. So I put it here because the journal entry is to debit the building. So I debit, I add here. So that was the one related to workings, still working related to, what was the working number 3 that we did much earlier. Then you have another thing that you need to take note, that at the end of the year, the building has a value here of 20.5 million. So for that year, your depreciation should no longer be based on the previous amount, 18 million. It should be based on the fair value. Why? Because the fair value exercise or the revaluation took place on 1st of October 2018. So therefore you need to go and calculate the current depreciation, or you call it charge for the year. Charge for the year. And we already calculated that based on the fair value divided by the remaining useful life, and that was 500,000. So I put here 0.5 million debit depreciation, credit accumulated depreciation. That's why you have it here. Okay. What is the balance at the beginning of the year, you may ask me? The balance is also 3.24 because that is what you eliminate at the beginning of the year. So from your workings, if you can check out, you will see that the balance was 3.24 million. And because it was being revalued, all the balance on the accumulated depreciation pertaining to the revaluation must be eliminated. Okay, I hope that's clear. And therefore, for this one, we are almost done for this section. You have 0.5 million for the accumulated depreciation at the end of the year, and that one will give you 20 million carrying amount as at 30th of September 19. Okay, we go to the next asset, which is our office building. Remember, office building, we come across derecognition. For the derecognition, this one here, right? If you were to do journal entry, this is just some extra answer that I want you to know. The journal entry would be, debit accumulated depreciation, and you need to debit how much? 60 from the workings that you have up there. You have to debit your bank how much? 440,000, and what you derecognize is your office building. I put here OB, office building, that's better. And the cost of the office building to be disposed was 300,000. And you credit also the SOPL, which is your gain on disposal. So the gain on disposal was 200,000. So our focus here is to see the effect of this. So this one is the one that you will deduct. And remember, I have mentioned that means to put in the accumulated depreciation. This one plus to the cost section. And before that, you need to split this 60,000 into 6,000 and 6,050 for these two. Okay, we put the factory building information here. So we do the one that were being derecognized first. Derecognize. So the amount is 0.3. And at the end of the year, there is no more balance. The balance is 0. So the same thing here, it will also bring back you to 0. Here is 54. Remember the split between 6 and 54. The current year depreciation was 6,000, and you have the derecognition, or the disposal. The accumulated depreciation that you derecognize was the total here, 60,000. So therefore the balance here is 0, and this one is also 0. So you are done with the movement of PPE, for your question. This is the cost section. This part here, cost, and this is the accumulated section, and this one here is one of the important section. This one is the one on carrying amount at the end of the year. Okay, I'm done with this video. I hope you have understood this movement of PPE much better than before. I'll see you again in next video. Until then, stay safe, study wherever you are. Assalamualaikum warahmatullahi ta'ala wabarakatuh.